But as I mentioned to Jay, I think it'll be interesting if the conversation starts to build of, well, if you're still into these optionality plays because you want something to make, as like a development play, whether it's gold, silver, again, whatever commodity, you need the commodity price to be higher, to take advantage of that leverage. Well, there's a difference between a little bit of optionality and a lot. And some of these massive, like gold projects, like Jay and I were looking at a few, 20 million plus ounces. I mean, they need gold to be $1,800 or $2,000, and keep in mind everything else being equal, because you need oil to stay down, or you need other input costs to stay down. I mean, that's a huge jump. But there's a few that only need gold to be 14 or 1,500, and that's interesting me more. And that would be very interesting to see a gap in some of those closer near optionality plays perform better than the bigger ones, or the ones that have the bigger gap, because so far you've in some of those that are more extreme, you've been able to make more money. And so that's something I'm keeping my eye on. I just wanted to throw that out there.
Jay said something. You said something really interesting about once you get about 100% or more on any particular stock, then maybe it's a good idea to sell half of it, keep your initial investment, whatever. But what happens to the money that you've just made while you sold? Because I'm very tempted to just grab that money and just buy something else, and then when the whole market goes up and down, then is that really safer? I mean, is it or is it not?
That's the part of human conditioning that's so difficult to conquer, because when you have cash on the side, you don't really want to keep it on the side, because you're going to be looking at these forums and researching these companies, and you're going to be like, oh, I have so much capital, and this story looks so appealing, I just want to jump in on it, and I guess it comes with experience. When you've played this game long enough, you kind of realize at some point, like, it's hindsight now, but prior to this big drop that we just had, somebody more experienced might have been, we haven't had one of those moments yet, so I'm just going to, be a little more cautious and, park, this amount of cash on the sidelines and just not touch it. I'll be very open and admit that I would have totally botched that one, and I have made that mistake, because I have trimmed some positions, and when I had cash, I was like very anxious to get in on the next go. And just to add a point, on the topic back to early stage exploration and kind of Nick's focus, one thing I've kind of learned in that space is, if you get into these stories really early, before the crowds kind of pile on in, and these stories and these shares are so illiquid to begin with anyway, you don't even need a drill hole for these stocks to double, right? And to me, that's the most incredible thing. You find something that you're interested in and you want to invest in. You get in early. The crowds, start, the newsletter writers and everybody on the forums, start discussing it, and everybody starts to form this consensus. It's a good idea, let's go buy some shares, and then the stock will double or even triple, right? So if you're the early entrant, on nothing, right? If you're the early entrant and you're looking at the stock, it's like, okay, they have like soil samples, but they haven't drilled anything at all yet. Maybe it's a good idea that I trim, half the position and just take the free ride, right? Because, you can still participate in all the upside and you have no risk. You've completely de-risked yourself. And, with these exploration plays, you don't really have to even wait 6 months or anything like that. It could happen in a span of, I don't know, like Nick would know better than I would, but maybe like in a span of 1 month, a stock could double once it's discovered. So I just think it's a great strategy to utilize, because I look at my portfolio now, and I'm more focused on kind of more proven mid-tier producers, that are, in a sense less volatile because they're not so dependent on the result, drill results. But I also think, it would have been a great strategy if, like, let's say I found 5 exploration plays that I was really interested in. Had I gotten in early enough on all of them, if they really are prospective enough, they will double before the drill results, the first batch of drill results comes out. So, I just kind of thinking and, scribbling notes for my own learning, and it's kind of like, I should have paid more attention to a lot of the early stage stuff, because I probably could have taken a lot of free rides. And what's cooler than that, right? To be able to participate in the story, to know that you're fully de-risked 100%.
I think it's hilarious how we say like 100% on your money is sort of just a little piece of the move. When you look at the market and it's like, hello, 100% will take you several years to get.
Most people are like, I would kill for 3 or 4%, returns in a year, especially, with how much the broader markets have kind of plateaued, right? And, if you're looking at kind of like how emerging markets have been doing, and other markets outside the U.S., I mean, the S&P is actually holding up pretty well, relatively speaking. So I get a good chuckle out of that. What you're saying, because we're just throwing out these gains like, it's just 100, 200%.
Yeah,
if you're not well versed in the mining sector, which is so inherently leveraged, that's why these gains are even possible. You're not going to really be able to grasp that those type of like figures, right? They sound so astronomical and like they're just too far-fetched to believe. But the reality is, it's true, and especially with exploration stories in an up market, it is the most potent leverage that you can tap into, because if the spot price of, let's say, gold and silver climb up, these exploration stocks will still go along with, it'll be like a rising tide lifts all boats. But if they hit and, there's really, actually, if the bull market is fierce enough, you don't really even have to hit anything. You just have to publish a really, pretty, press release that just massages all the details, and just, what's Nick's favorite, visible gold. just highlight that, 5 or 6 times. But if the bull market is, that strong, that stock could go up 10% just based off that, right? So it's pretty incredible. So you can only imagine if you're a legitimate explorer and you do really drill something phenomenal and game changing, then you could probably 3x, 5x your money in no time. I mean, in the right climate, in the right bull market environment, which we did experience the first half of the year.